Yes, the Indian Partnership Act 1932. So section number 1 provides three provisions: short title, extent and commencement. The short title is the Indian Partnership Act 1932. Extent, the whole of India. Commencement, 1st October 1932. Okay. So definition, section number 4 of the Partnership Act, the Indian Partnership Act provides what? Definition of partnership. So what is partnership? Partnership is nothing but the relationship between the persons who have agreed to share what? Profits of the business carried on by all or any one of them acting for all. This is the definition of what? Partnership. So it's a relationship between the persons who have agreed to share the profits of the business carried on by all or any one of them acting for all. So this business can be managed by all the partners or anyone can manage for the benefit of whom? All the partners. Okay, yes. The name under which they carry the business is called as partnership firm name. All of them together called as partnership, individually called as partners. Okay, yes. So essential ingredients for constitution of the partnership firms. What are the things required to start a partnership firm? First one, there should be an agreement between whom? Between the parties. Now what is parties here? Parties means the persons. When I say persons, it can be how many types? It can be two types. What are the two types? Natural person as well as an artificial person. What is natural person? Natural person means the human being. What is artificial person? The creation of a law. Creation of what? A law. Yes, creation of a law. Okay, so natural person is the creation of human beings. Artificial person, it is a creation of a law. There should be persons. How many persons? Two persons. Persons can be natural persons or artificial persons. Minimum two persons. Minimum how many persons? Two persons. Maximum how many? Maximum is 50. As of now, it is what? 50. Can government increase this, sir? Yes, it can increase up to how many? 100. Government can increase this to up to 100 by what? By notification in the official gazette. As on today, the limit is 50. If it is a business and carried by more than 50 persons without registration, when it is considered as illegal association. So the maximum number of partners allowed in a partnership firm is how many? Is 50, not more than 50. Okay. The agreement must be to what? Share the profits of the business. Profits of what? Business, which can be business includes trade, profession as well as the occupations. So there should be an agreement between the parties. Parties means two persons, more than two or more persons. Maximum is 50. Agreement must be to share what? Profits of the business. So there should be an agreement to share the profits made by the business. Okay, now when I say business, business includes what? It includes trade, occupation as well as the profession. Trade, occupation as well as the professions, all are called as what? Includes the business. Next, the business must be carried on by all or any one of them acting for all. The business can be managed by all the partners or anyone can manage the business on behalf of all the partners. This carried on by all or any one of them acting for all is also called as what? Mutual agency. What agency? Mutual agency. So how this mutual agency works, sir? Let's say X, Y, Z are the partners. So in these partnership firm, if they are having a partnership firm, X, Y, Z individually called as partners. Individually called as what? Partners. Together all of them are called as what? Partnership firm. And the name under which they carry the business is called as firm name. So here, if Z does something, who will be responsible? X, Y, Z will be responsible. And if X does something, who will be held responsible? X, Y, Z will be held responsible. And if Y does something, who will be held responsible? X, Y, Z will be held responsible. That is why there is a mutual agency concept. What is agents? What is agency? Where one person act on behalf of other person. So here one of the partner will work for all the partners. So when he work for all the partners, he is considered as agent, remaining all are considered as the principal. And for the act of agent, who will be held responsible? Principal will be held responsible. That is called as mutual agency. Next, the agreement need not be in writing. It may be oral, it may be expressed, or it can be implied. So the partnership agreement, it's not only required to be in writing, it can be in oral form, or it can be in the written form, it can be expressed, or it can be implied. How it can be implied, sir? It can be implied by conduct of the parties. Implied by what? Conduct of the parties, or by circumstances. Example, partner by estoppel, partner by holding out. It is an example for implied contract of partnership. Okay, yes. So these are the essentials of what? Essentials of a valid partnership. What partnership? A valid partnerships. What are the essentials of partnership? There should be minimum how many parties? Minimum how many? 2. Maximum 50. Can Hindu undivided family have more than 50 persons and carry the business? Yes. Can a CA firm have more than 50 partners? Is it allowed? Yes, a CA firm can have more than 50 partners, because the provision of illegal association is not applicable to what? Applicable to HUFs and professional firms. Okay. Now, what if there is an NGO, non-profit organization, having 60 members, and without registrations, without registering it as a company, they are carrying these activities? Is it called as illegal association? No. Very good. Why? Because the purpose should be to what? Earn the profit. Then only it is considered as illegal associations. So NGOs are not, does not cover under what? Illegal associations. Okay. Yes. Can there be a partnership firm for carrying charitable activities? Can we start a partnership firm for the purpose of doing charitable activities? There are 20 partners, started a partnership firm to do charity. Is it valid or invalid based on the definition? No, you cannot start a partnership firm for charitable activities. Okay, it clearly provide, definition clearly provide to share what? Profits of the business. Business means trade, occupations, or professions. So the object of the partnership firm is to carry the business for earning what? Profit. So you cannot start a partnership for what purpose? Charitable purposes. Okay, yes. So this is about the definition of partnership. Section number kya hai? Section number 4. Next, different types of partnership. So we can classify partnership into how many types? Actually into 2 types. Section number 7, section number 8 of Indian Partnership Act 1932. Section number 7, section number 8 provides the classification of what? Partnership firm. There are 2 types of partnership. One is particular partnership, another one is partnership at will. But they are made here 4 classifications, but as per law only how many classifications are there? 2 classifications. What are they? Partnership at will and particular partnership. So now what is particular partnership, sir? If a partnership firm is formed for a particular purpose or for a particular period, it is considered as what? A particular partnership. If a partnership is formed for an indefinite period or without any provision in the agreement with respect to the durations, then it is considered as what? Partnership at will. Okay, so if there is a provision in the partnership deed with respect to duration or the termination of partnership firm, it is called as particular partnership. And if there is no provision with respect to the same, it is considered as what? Partnership at will. Limited partnership means where the liability of the partners is limited. General partnership firm means it is a partnership firm which is formed for carrying a general purpose, means there is no particular activity mentioned over there. So these are the four types of what? Four types of partnership. Okay. The liability of each partners is unlimited. It means that partners firms creditors can realize their dues in full from any of the partners by attaching their personal property if the firm's assets are found to be inadequate to pay off its debt. That is considered as a general partnership. A limited partnership is a partnership consisting of some partners whose liability is limited to the amount of capital contributed by each. That is called as limited partnership. Okay, so in India we have limited liability partnership where the liability of the partners is limited. Partnership at will and particular partnership. This is what given in the Partnership Act, section number 7, section number 8. Section number 7 provides partnership at will, means it's a partnership where there is no provision in the agreement with respect to duration or termination of partnership. That is called as partnership at will, means the partners can carry the business till the time they want without any restrictions. That is called as partnership at will, and whenever they want to dissolve it, they can dissolve it. But a particular partnership firm, it is opposite to what? Partnership at will, where this will be formed for a particular period, let's say 1 year, 2 years, 3 years, or to achieve some purpose, production of a movie, construction of a railway lines, construction of roads. That is called as a particular partnership. If a partnership is formed for indefinite period without a provision in the agreement with respect to the same, it is called as partnership at will. If there is a provision in the partnership deed with respect to the durations or the purpose for which it is formed, it is called as particular partnership. Okay, different types of partners. We can classify the partners into what? The various types. What are they, sir? First one, working partner or active partner. Who is working partner? He is a partner who introduces capital to the business and actively take part in management of the business. That partner is called as what? Called as active partner or ostensible partner or actual partner. The partner who introduces what? Capital, plus he actively takes part in the management of business. Takes part in what? Management of the business. Management. Then he is considered as what? Active partner. Then there is a sleeping or dormant partner. Who is sleeping or dormant partner, sir? He is a partner who invests the money in the business, but he does not take part in the management of the business. He invests the capital, he shares the profits, but he does not take part in the management. He does not take part in the management of the business. Management of the business. Then he is considered as what partner? Sleeping or dormant partner. Then comes secret partner. Who is secret partner? The persons whose name is not disclosed to the public, he is considered as what? Secret partner. Okay. Then limited partner means the partner whose liability is limited. Whose liability is what? Limited. He is called as limited partner. Next one, partners in profit only. He is a partner who shares only the profit, not the losses. That partner is considered as partner in profit only. Nominal or ostensible or quasi partner. Who is nominal partner? The partner who has just provided a name. Any person who becomes a partner just for the namesake. He has provided his goodwill or a brand. That person is called as a nominal partner or namesake partner. Okay, he is liable like other partners, but is considered as what? Nominal partner. Minor as a partner. This concept is totally wrong. A minor cannot be a partner. He can never be called as a partner. He is called as beneficiaries. As per section number 30 of Indian Partnership Act 1932, a minor can become a beneficiary of partnership firm. He can't be called as partners. And these types of partners, whatever they are given here, and these are all, what do you say, bachpan ka baat. These limited partners, secret partners, that those concepts are not there in the law. This concept of secret partners, we can agree to some extent. Nominal partner, partners in profit only, then dormant partner and active partners, but not these secret partners. And a minor as a partner. A minor can never be a partner. He can only be what? Beneficiary. Sir, why, sir? Because he is incompetent to contract. Only a person who is competent to contract can be a partner. But section number 30 provides a minor can be a beneficiary of a partnership firm. The answer is yes, he can become beneficiary of a partnership firm. Done? Yes. A active partner contributes capital and also takes part actively in the management of the firm. That partner is called as what? Active partner. And he is also known to whom? Outsiders. Because he is known to outsiders, when he retires, when he go out of the partnership firm, he must give a public notice. If public notice is not given, then he will be held responsible even after his retirement. Then sleeping or inactive partner simply contributes capital. He does not actively take part in the management of the firm. He shares the profit, he shares the losses, but he does not take part in the management of the business. That person is called as the sleeping partner. Okay. Secret partner contributes capital and takes active part in the management of the firm. He shares profit and losses of the firm. However, his connection with the firm is not known to the outside world. If it is not disclosed, if his name is not disclosed, he is called as what? Secret partner. Okay. The liability of such partner is limited to the extent of share in the capital and profits of the firm. He is not entitled to take active part in the management of the firm's business. The firm is not dissolved in the event of his death or lunacy or bankruptcy. In case of what? In case of secret partner. Partners in profit only shares in the profit of the firm, not in the losses. But his liability for the firm debts is unlimited, means even he will be held responsible. That partner is considered as partners in profit only. Nominal partner means namesake partner, the one who provides his name as a partner of the partnership firm. It does not share the profits, it does not share the losses, it does not take part in the management of the business. But still he will be called as a partner. That person is called as what? A nominal partner. Okay. Then we have partner by estoppel and partner by holding out. Partner by estoppel and partner by holding out. Section number 28. Section number 28 provides the provision with respect to partner by estoppel and partner by holding out. Now, what is partner by estoppel, sir? Like how can we say, or when can we say a person becomes a partner by estoppel or partner by holding out? See, we can call a person as partner by estoppel if he satisfied three conditions. What are three conditions? First thing is there should be a representation. There must be what? A representation by a person. A representation by a person, either by what? Words. A representation by persons, either by words or by conduct, as what? As a partner. Then based on such representation, a third party has provided loan, provided credit to the partnership firm. Credit to the firm. Credit to the firm. Then the representations are made by the words or the conduct as a partner. The third party has provided the credit to the partnership firm based on such representations, and this third party was acting in good faith. Acting in what faith? Good faith. Now what is acting in good faith, sir? Means he believes that whoever made a representation is an what? Partner. So because he believed that the person who has made a representation is a partner, then he will be responsible to whom? To the person who has given the credit to the partnership firm based on such representations. Let's say X, Y, Z are partners. A is not a partner. He make a statement to whom? To Mr. Let's say B, that who is also a partner. A is also a partner. He made a statement to Mr. B. Based on this statement, who believed? Mr. B believed that even Mr. A is a partner, so he gave a loan of how much? 3 lakh rupees. Now for the repayment of this loan, who is also responsible? Even A is also responsible as what? Partner by estoppel. Now Mr. A will be held responsible as what? Partner by estoppel. Is he a partner in reality, sir? No. but he becomes liable to this innocent party because acted in what faith? Good faith. He trusted or believed that even who is also a partner, even A is also a partner. That is why he is called as partner by estoppel or partner by holding out. Partner by estoppel or partner by holding out. Okay, section number 28. Section number 28. Next. For example, suppose a rich man, Jalal, is not a partner, but he tells Ramu that he is a partner in the firm called Alpha Enterprises. On this impression, Ramu sell the goods worth of 20,000 to the firm. Means Ramu gave credit, believing that who is also a partner? Jalal is also a partner. Later on, the firm is unable to pay the amount. Now the question is, can Ramu recover the money from Jalal? Jalal is not a partner, but he said to Ramu that he is also a partner of Alpha Enterprises. Based on this representation, who gave loan? Ramu supplied the goods worth of how much? 20,000 to the firm. Now the question is, can Ramu recover the money from Jalal? What is the answer? Is he responsible? Why he is not responsible? Okay, I got two different answers. One is saying no, one is saying yes. The answer is yes. Why? Because he becomes a partner by estoppel. He made a statement that he is a partner. Based on such statement, who gave loan here? One of the persons provided a loan to whom? Partnership firm. So because somebody has acted based on the representations, he will be held what? Responsible. इसको बोलते हैं estoppel. In the law, we have a concept called estoppel. We have a concept called as what? Estoppel. So what happens in estoppel is, estoppel means stop from denying. Stop from what? Denying. That is the meaning of the word estoppel. If you make one statement, you can't change it later. You should stick to whatever you said. That is called as estoppel. A person is not allowed to make two different statements at a two different context or two different situations. For example, if you say you are married now, when liability comes, you can't say you are not married. Or if you say, if you promise to a girl that you will marry her now, you cannot say, when the liability comes, you can't say I will not marry you. That is called as principle of estoppel. The court will stop you from doing that. In the same way, when you said you are a partner, and based on that statement, if somebody does something, means providing a loan, selling the goods, then for that who will be responsible? You will be held responsible as a partner by estoppel. So in this case, who is responsible? Jalal will be held responsible. Okay, yes. Suppose one more example. Suppose Alpha tells Ramu, Alpha is an enterprises, tells Ramu in the presence of Jalal that Jalal is a partner in the firm, even though he is not. Jalal does not deny it, means he remains silent. Later on, Ramu gives a loan of 20,000 to Alpha Enterprises. Now the question is, will he be held responsible? In the second example, will Jalal be held responsible? The answer is yes. He will be considered as what? Partner by holding out. See, a person, he himself represent as a partner. He is called as partner by estoppel. When partnership firm represent him as a partner and he remains silent, that is called as partner by holding out. Yes, because he did not deny it. If he did not deny it, means what? He is admitting that he is a partner. He made a representation now. So he will be held responsible. Okay. Next one, partnership is what? Creation of a contract. Same thing. See, whatever the notes which I have prepared, it's in order, section wise. Section 1, section number 2, section number 3, section number 4. Same concepts are there in your material also, but it is in the jumbled form. Section number 5 comes first, then section number, remaining section numbers comes. But here it is a little bit jumbled. That is why I was using that notes. Anyway, partnership is the creation of what? Contract. So partnership comes into existence only by what? Agreement, not by status. But in case of HUF, a person becomes part of HUF by what? A birth. Correct, right? So in examination, if they ask what is the how the partnership is created, a partnership is always created by what? Agreement, not by status. Next one, difference between partnership and company. Let us discuss. A legal entity. Which one has separate legal entity? Company has separate legal entity. Partnership firms does not have separate legal entity. Correct, right? Liability. Which one is unlimited? Company it is limited. Partnership it is unlimited. The liability of the partners is unlimited in case of partnership firm, but in case of company it is limited. Number of members in case of company, minimum private company 2, maximum 200, public company 7, maximum unlimited. But in case of partnership firm, what is the number of partners? Minimum 2, maximum 50. If it goes beyond 50, it is considered as what association? If it goes beyond 50, it is considered as what association? If a partnership firm or an association is having more than 50, it is called as illegal association. As per which act? Companies Act 2013, section number 464. Okay. Transfer of shares. Can a partner transfer his shares without the permission of other partners? No, he can't transfer. Okay. But in case of company, can it be transferred? Yes, it can be transferred. The public company shares are freely transferable from one person to another person. Management is done by whom? Partnership firm can be managed by all partners or any one partner. But in case of company, it is managed by whom? Board of directors. The board of directors can be members themselves or it can be an outsiders also. But in case of partnership firm, it is managed by whom? Managed by the partners only, either by all partners or any one partner. Relationship, there is a mutual agency relationship between whom? Partners. But in case of company, there is no such mutual agency relationship between the members. For the act of one member, who is not responsible? Other member is not responsible. But there is a mutual agency relationship in case of what? Partnership firm, where for the act of one partner, other partner is held responsible. Profit distribution. Is it mandatory in case of partnership firm? Yes, the distribution of profit is mandatory as per the agreement, but company distribution of profit is not mandatory. Whatever the profit earned can be kept for future expansions and diversification. That is in case of company. Remedy to creditors. The creditors can file a case against whom? Partnership firm, even against the partners, because when I say partnership firm, it means whom? All the partners. The liability is joint as well as several. But in case of company, the creditor can only file a case against whom? Company, because company is different, members are different. There is a separate legal entity. Next one, audit. Partnership firm, audit is not compulsory. But in case of company, is it compulsory? Yes, because you should maintain your accounts as per Companies Act, Schedule 3. And also you should get that accounts audited as per the Companies Act. Dissolution. A firm comes to an end. The firm is dissolved by death or insolvency or retirement of a partner, but a company is dissolved only by the order of the court, NCLT. Next one, difference between partnership and LLP. What is LLP, sir? We have one more type of partnership called as limited liability partnership, LLP Act. We will discuss that chapter later. So in case of LLP, the liability of the partners is limited. It's a combination of partnership and a company, which has advantages of both partnership and a company. That is called as LLP, limited liability partnership. Legal entity, partnership, not a separate legal entity. LLP is a separate legal entity. Liability in case of partnership, it is unlimited. In case of LLP, it is what? Limited. Number of members, maximum 50 in case of partnership, but in case of LLP, there is no limit. You can have as many number as partners as possible in case of LLP. Entering into contract, partnership is not a separate person and cannot enter into a contract on behalf of its partners. But LLP can enter into contract and hold the property in its own name because LLP is a body corporate, separate legal entity. Compliance of law, in case of partnership there are lesser compliances compared to what? Compared to the LLP, because LLP there are more compliances, supposed to file form 8, form 11 with ROC every year. Dissolution, partnership firm comes to an end by death or insolvency of a partner, but in case of LLP it can be dissolved only by the order of whom? Court. Difference between partnership and HUF. Again, the difference between what? Partnership and HUF. Relationship, there is a relationship subsists between the partners, means there is a mutual agency relationship. But in case of HUF, there is no mutual agency relationship. Okay. It's a single person and it cannot have a partnership by itself. Management, all the partners may involve in the management of the partnership, but in case of HUF, it is managed by the Karta, the head of the family. Share of profit, partners can share the profit as per the agreement. No sharing of profit in case of HUF. Only sharing of assets will be there at the time of a partition. Property, the property belongs to all the partners. And in case of HUF also it belongs to whom? All the family members. If a person acquires the property out of his personal money, that belongs to him only. Only when the property is acquired by family money, then it becomes the family property and each owner has the right. Authority, each partner is the agent of others. One partner is the agent of other partners. But there is no such concept in case of HUF. For the act of one member, other member is not liable. Dissolution, a partnership firm can be dissolved on the death of the partner or retirement of a partner, but in case of HUF, the HUF will continue until there is a partition. Okay, so these are the few provision with respect to what? Nature of partnerships, and we also discussed the difference. Okay, so Indian Partnership Act 1932, in the first topic, the main thing is section number 4, definition of partnership. Section number 5, creation of partnership. Then we also discussed about the types of partnership. There are how many types of partnership? 2 types, particular partnership and a general partnership, or partnership at will. Types of partners, we also discussed types of partners: active partners, sleeping partner, then partners in profit only, nominal partners, and what is the last one? Partner by estoppel or partner by holding out. Okay, yes. Next, section number 9. Section number kya? 9. Section number 9 provides the duties of the partners. So there are 3 duties under section number 9. Section number 9 provides how many duties? 3 duties on the partners. What are 3 duties? The first duty is the partners are bound to carry on the business of the firm to the greatest common advantage. Means when partners managing the business, let's say A, B, C are the partners. When they manage the business, let's say Mr. C is the managing partner. He is managing the business of the partnership firm. So when you manage the partnership business, you should always take into consideration the partnership advantage, all the partners' interest. It means Mr. C should not make any personal profit out of partnership transaction or out of partnership money or out of partnership firm name. If you make any personal profit, it amounts to breach of duty. And these duties given under the section number 9 are common in all types of partnership. These are presumed to be there in all types of partnership. So it is the duty of a partner to act for whose benefit? Entire partnership firm benefit, for all the partners benefit, not for his individual benefit. Okay, this is the first duty. So it is the duty of a partner to carry on the business of the partnership firm for whose advantage? Partnership firm advantage. He should be just and faithful to each other. Both the partners must be what? Just and faithful to each other. When they carry the business, they should be just, equity. They should not do any frauds. They should not remove a partner for unjustified reasons, because they are expected to be just and faithful to each other partners. Next one, render true accounts. Important. He shall provide the true accounts and complete information about all the things of the firm to the other partners or to the legal representatives. Every partner shall indemnify the firm for any loss caused to it by his fraud in the conduct of the business of the firm. This is section number 10. This is not section number 9. This is section number 10. Separate duty. Okay. Section number 9 only provides how many duties? 3 duties. What are 3 duties? The partnership firm should be managed for the benefit of all the partners. The partners should be just and faithful to each other, and they must render the true accounts and complete information about the partnership transactions to the partner or to his legal representatives. Every partner shall indemnify the firm, the partnership firm, for any loss caused to it by fraud in the conduct of the business of the firm. So while carrying the partnership business, if he commits any fraud, if a partner commits any fraud, then because of that fraud, if there is a loss to the partnership firm, who shall compensate? The partner shall compensate. Okay, so these are the duties under the Partnership Act of the partners. Along with that, these duties, the partners may agree other duties also. Under the section number 11, the partners can decide the rights and duties in the partnership deed. Clear? Section number 9 and 10 deals with what? Duties of the partners. Duties of whom? Partners. Okay. Section number 9 provides how many duties? 3 duties. Remember, what are the 3 duties? Greatest common advantage for the benefit of all the partners. Just and faithful. Just and faithful to each other. The third one, they shall provide the true accounts and complete informations about the partnership transactions. These are the 3 duties. Section number 10 provides one more duty. What is that one more duty? If because of a partner act, if a partner does a fraud, and because of this fraud, partnership firm incurs the loss to the partnership firm, then it becomes the duty of the partner who has done the fraud to compensate whom? The entire partnership firm. That is section number 10. Okay. Section number 9 and section number 10. Done? Duties of the partners. Next, duties of the partners. Section number 11 provides the rights and duties of partner. Determination of rights and duties of the partner. Section number 11. Section number 11 provides that the mutual rights and duties of the partners of a firm may be determined by contract entered into between the partners. That is the contract made by the partners. So the partners can decide their rights and duties by entering into an agreement. That agreement is called as what? Partnership agreement or partnership deed. That contract may be either expressed or it can be implied. What is expressed? By words. What is implied? By the conduct. Okay. So I repeat, how the partners can decide their rights and duties. Where they will decide? They can draft an agreement between them. That agreement is called as what? Partnership deed, which is required to be on a stamp paper of value of more than 500 rupees. Make an agreement on a stamp paper and you can agree, you can mention your rights and duties. Section number 11. And this agreement, if you want to change it later, can you change it? The answer is yes, it can be changed with the consent of whom? All the partners. If there are 3 partners, they start a partnership, they can agree their rights and duties in the partnership deed. If they want to change any of those contents, can they change it, sir? Yes, they can change it. How they can change it? With the consent of all the partners. Next, in the partnership deed, there can also be a provision for restricting a person from carrying any business when he is a partner, and same business after retirement. Sir, doesn't it amount to violation of section number 27 of Indian Contract Act, which provides an agreement in restraint of business or trade is void? The answer is yes, but however, it is an exception. Section number 27 provides any agreement which restricts a person right to carry a lawful business or trade, it is considered as void, not enforceable by law. But one of the exception is that an agreement in restraint of trade in case of partnership agreement. The partnership agreement can restrict a partner from carrying what business? Any business when he is a partner, and same business after retirement. Is it valid? The answer is yes, it is valid, and does not amounts to agreement in restraint of business or trade. Okay, I repeat, section number 11 provides the provision with respect to the rights and duties of the partners. The rights and the duties of the partners are decided by an agreement, and in that agreement they can include all the rights and duties, and they can change the rights and duties. They can change what? The rights and duties by with the consent of whom? All the partners. With the consent of whom? All the partners. And there can also be a provision in the partnership deed that a partner shall not carry any business when he is a partner. He should not work outside, or he shall not carry the same business after he retires from the partnership firm. Sir, is this provision valid? Is this condition valid? The answer is yes, because it is an exception to section number 27 of the Partnership Act. Sorry, Contract Act 1872. Okay, yes. Next, section number 12. Section number what? 12. Conduct of business. Before I go to section number 12, let me ask few questions to you guys. Tell me, section number 9 provides what? Duties of partners. Correct, right? Yes or no? Yes. One of the duty of the partners is to what? They should work for whose benefit? Partnership firm benefit. Correct, right? All the partners benefit. Can a partner make personal profit out of partnership transactions? No. No, he can't make a personal profit. If you make a personal profit, that amounts to what? Breach of duty, section number 9. Okay. Yes, he can't make any personal profit out of partnership transactions or out of partnership name or out of partnership property. Those things should be used for what purpose? Partnership firm purpose. What if is personal? Yeah, he can. That is what he can carry a separate business. If the agreement is silent, he can carry a separate business that he can make. The question here is, can he make a personal profit out of partnership firm transactions? No, because when you work in the partnership firm, you must work for whose benefit? Partnership firm benefit. Let's say there are X, Y, Z partners. Z is authorized to sell the land. They are into real estate business. Z is one of the partner who was authorized to sell the land to the outsiders. Now what Z did? He sold the land to Mr. A for a price of, let's say, 30 lakh rupees. Plus he also received a commission for himself. Commission of how much? 10% of commission. Let's say he has received 30,000 rupees of money as a what? Commission, not 30,000, 10% of. Tell me, is this receipt of money by Z, is it valid or is it invalid? Like, is it liable to give it back to the partnership firm or not? Is it a breach of duty? Is there any breach of duty here? Yes, there is a breach of duty, because when you work, he should work for the benefit of partnership firm, not for his own benefit. That is the first duty. Okay, next one. Are they required to be just and faithful to each other? Yes, they must be just and faithful to what? Each other. And the last condition in case of duties of a partner is that they shall provide the complete information and the true accounts of the partnership firm to other partners. Correct, right? Yes. Now let's say one of the partner is a managing partner. He know that he has an information that company is going to incur some loss in the upcoming financial year or the next financial year due to certain events. Without disclosing that fact to the other partners, he took their consent or he took their permission to introduce more capital. Tell me, is the consent of the parties is free or not free? Is there any breach of duty by one of the partner who is managing the affairs of the business? The answer is yes, because when he has the information, he must provide this information to whom? All the partners. Next one, section number 11. Listen, see, learning things both practically as well as theoretically, both are important. We should know how to apply them in the practical scenarios also, because this partnership act, companies act, and drafting of contracts, these are all practical things which takes place in the when you go to the practice. Okay, yes. Now if a client come and ask you, he want to start a partnership and he provide a list of things what he want to include, saying ki madam, I want to have this many rights, I want drawing rights, I want remuneration rights, I want these rights to other partner, I want him to I don't want him to have a drawing right. So he will bring all these rights and duties. Where can we agree all these rights and duties? What is the document called as where we can include all these rights and duties? It is called as partnership deed. What deed? Partnership deed. Now, can that partnership deed be altered later? Agreement is made, partnership started. After some time, they want to change something in it. Can it be changed? Yes, only with the consent of whom? All the partners. Only when all the partners agrees, it can be changed. Okay, yes. Now, there is one more provision. See, they want to concentrate only in one business. X and Y comes to you as your client. They ask you like, sir, we want to make sure none of us will divert ourselves with some other personal businesses. So let us do one thing. Include a provision in the agreement that we should not carry any business when we are partners. And similar business after retirement. If anyone of retires, another person continues, the outgoing partner should not carry the same business. This is the conditions they want to agree in the partnership deed. Can they agree these conditions? Can they include these conditions in the partnership deed? Yes, they can include. Even though it amounts to agreement in restraint of business or trade, it is an exception. Partnership agreement is an exception, so the restrictions will be valid. So you can restrict a partner from carrying any business when he is a partner. Means he should work only for the partnership firm, not anywhere else. Is it valid, sir? Yes, valid. Section number kya hai? Section number 11. Section number 12 provides conduct of business. Means the management of partnership affairs. These conduct of business provisions are applicable only when agreement is silent. What is silent? Agreement is silent. Section number 12 provides that subject to the contract between the partners, every partner has a right to take part in the conduct of the business. That is management of the business. Okay. When I use the word subject to, what is subject to, sir? Means this provision is not superior. It says I am applicable only when agreement is silent. See, let's say partnership deed. It clearly provides who can manage the business. Then law is not applicable. Law says subject to agreement. If agreement says contradictory thing, agreement is applicable. If you follow the whatever agreement says. If agreement is silent, then what law says? Every partner has the right to take part in conduct of business. Means who can manage the business? All the partners can manage the business. Clear? Yes. Next one. Every partner is bound to attend diligently, carefully to his duties in the conduct of what? Business. Every partner is bound to attend diligently, means carefully, with the ordinary care to his duties in the conduct of business while carrying out the partnership business. Next one important. Any difference arising has to ordinary matters, means how decisions to be made in the partnership business, partnership firm, when the agreement is silent. It provides that with respect to ordinary matters, you can decide those ordinary matters with the consent of majority of partners. And before you take decisions, you should consult all the partners. This is in case of what? When agreement is silent, and in case of ordinary matters. But in case of special matters, what matters? As special matters are in case of change of fundamental nature of business. For example, change of name of the partnership firm, then change of like introduction of a partner, admission of a partner, or if you want to lend your goodwill to somebody else. So these kind of things can be done only with the consent of whom? All the partner, because they are of serious nature, because it will change the nature of the business, that requires approval of all the partners. Okay, ordinary matters only majority partners consent is required for changes. For any matters which changes the fundamental nature of the business or the principle of the business, that requires approval of all the partners. Every partner has a right to have an access to inspect and take a copy of any books of the firm. So any books of the firm, when I say any books of the firm, it can be secret books, creditors book, everything. But however, this inspection should be done in good faith. Now what is good faith, sir? Good faith in the sense without having an ulterior motive. Okay, you should have a good intention of inspections. If a partner is trying to copy the secrets, then you want to inspect, it can be prevented. Then in the event of death of a partner, his legal heirs or legal representatives or their duly authorized agent shall have a right to access to and inspect and copy of any books of the firm. When they are alive partners, after their death, their legal heirs or the representatives can inspect the books of accounts. This is section number 12 with respect to conduct of partnership business. Now, a client comes and asks you, sir, in the agreement it is silent, sir, nothing is agreed. So tell me, who has a right to manage our partnership business? Sir, all of you have a right to manage your business. What if one partner prevents other partner from taking part in the management of the business? Can the partners who has been prevented file a case? Yes, he can file a case for what? Dissolution, closure of partnership firm. Clear? So these are section number 12 provisions. It provides conduct of business. Who can manage the business? All the partners. And while carrying out those businesses, they should act diligently. Then any difference arising with respect to ordinary matters can be settled with the consent of what? Majority of partners. And before that, you should consult all the partners. With respect to any changes in the nature of business, that requires approval of whom? All the partners. Okay, and every partner has a right to access to inspect and take a copy of any books of the firm, but however this should be done in what faith? Good faith. Okay, case law Rajinikanth Asmukhlal Golwala versus Nataraja Theatre. It was held that section number 12 of the act gives a right to every partner to take part in conduct of the business. Of course, the right which is enshrined in this act takes effect subject to any express or implied contract. Means if agreement says otherwise, that is what? Applicable. Okay, it was held that a partner is not liable for negligence if he can show that use such skill and intelligence as he possessed in the conduct of business. So if he has taken the reasonable care, then he will not be responsible. Only when he is negligent, when he does not carry out his duties diligently, then he will be held liable for payment of compensation. So this is with respect to what? Section number 12. I'll ask few questions to you guys. You please try to answer these questions. Okay, so let me see. There is a partnership deed. Partnership deed. And section number 12. Section number 12 provides that we know who can manage the business? All partners can manage the business. Correct, right? All partners can take part in what? Conduct of business. Who can take part? All the partners can take part. All the partners. What's happening to this? All partners can take part in the management of business. But partnership deed says, let's say there are 3 partners, X, Y, Z. It says only X can manage the business. Who can manage the business? X can manage the business. Only X can manage the business. Now tell me, who can manage the business now? Hello? Who has a right to manage the business? Only X. If good, if Y and Z are not allowed to take part in the management of the business, can they go and file a case? No. Why? Because it is agreed. The provision of section number 12 are applicable subject to the contract or agreement made between the partners. That is why it is not applicable. Okay. Yes. So partnership deed, if silent, then a partnership act is applicable. Means every partner has the right to take part in the management or conduct of business. Management or conduct of what? A business. Next, section number 13 provides the mutual rights and duties of the partners, rights and liabilities. See, section number 11, as per section number 11, the rights and liabilities are agreed by partners. Where? Partnership deed. If partnership deed is silent, then the section number 13 is applicable. So again, section number 13 provisions are applicable subject to contract between the partners. So it says every partner, whoever takes part in the conduct of partnership business, is not entitled to receive what? Remunerations. Law says no remuneration for working in the partnership firm. Second one, profit should be shared in an equal ratio, both profit as well as losses. And if you have given any, if you want interest on capital, that is allowed only when there is a provision in the agreement, plus that interest payable should be paid only out of profit. This is what law says. And the next one, a partner for the making the loss business, the payment of any advance, means if a partner gives any extra money to the partnership firm beyond the capital, he is entitled to interest of how much? 6% per annum. 6% per annum interest on loan. The firm shall indemnify a partner in respect of payments made and liabilities incurred by him. Means the partnership firm shall indemnify, means compensate whom? A partner in respect of payments made and liabilities incurred by him in the ordinary and proper conduct of business. If a partner suffers any personal losses due to the partnership business, means he incurs his own expenses, that should be compensated by the partnership firm. When, if it is in the ordinary and proper conduct of business, in doing such act in an emergency for the purpose of protecting the firm from the loss, and a partner shall indemnify the firm for any loss caused to it by his willful neglect in the conduct of business of the firm. So if he because of his negligence, if the partnership firm suffers the loss, then he shall compensate the partnership firm in the same way like how partnership firm compensate him for any losses he suffers. So these are the provisions of section number 12. Okay, and provisions of section number 12 is applicable only when the agreement between the partners is silent. Okay, yes. Now tell me, I'll ask few questions. Can you pay interest on capital if agreement is silent? Yes or no? If partnership deed is silent, it does not provide anything in the partnership deed, can you pay interest on capital? Can a partnership firm pay interest on capital to a partner if partnership agreement is silent about it? No. Very good. Now, what if partnership deed says a partner is entitled to interest on capital, but partnership firm have a loss? Can you pay interest out of loss? No. The reason is, see, interest on capital is an appropriation of profit, not a charge on profit. And when there is no profit, what you can appropriate? That is why you cannot pay interest on what? Capital. Not allowed. If there is a loss. Now, the question, if agreement is silent, there is no provision in the agreement. Partner has given a loan of 3 lakh. Is he entitled to interest? Is he entitled to any interest? Yes. How much? 6% per annum. Okay. Now, one more example. Let's say a partner is a partner in a partnership firm. He is a managing partner. He works in the partnership firm day and night. Is he eligible for remuneration if partnership deed is silent? Can he be paid remuneration if partnership deed is silent? The answer is no. He cannot be paid any remuneration. Only when there is a provision in the agreement, he can get remuneration for his work. Okay, this is section number 12. Sorry, section number 13 with respect to rights and duties of what? Rights and duties of the partners. It was held that in the absence of stipulation in the partnership agreement to the effect that the interest would be paid on all installments irrespective of the fact as to whether there was any profit or loss, section number 13 comes into play, and interest is therefore payable only out of what? Profits earned by the partnership business. If there is a loss, you can't pay interest on capital. Tell me, if partnership deed is silent, partners should share the profits and losses in what ratio? Equal ratio. That is what law says. Law provides. What if partnership deed clearly provide the specific ratios? Then the profits and the losses should be shared in that agreed ratio. Banwari Lal versus Sheikh Shukrullah. It was held that partner who is guilty of willful negligence in the conduct of partnership business is liable to indemnify the firm. Indemnify means compensate. We have discussed the contract of indemnity. Caused to it by his willful neglect, and is not himself entitled to indemnified by the other partners. Okay, this is section number 13. Next, section number 16 provides that, section number 16 important hai, that is personal profit made by the partners. Personal profit. Now tell me, please answer this question. Can a partner make personal profit while acting in the partnership firm? Can he make personal profit, or he should work for partnership firm? Should work for whom? Partnership firm. Very good, awesome answers. So section number 16 provides that a partner, if he derives any profit for himself, personal profit, either from transaction of the firm, I gave an example of sale of property and you received a commission, or use of the property of the firm. You have a partnership property, use it for personal purpose or some other purpose, and you made a personal money out of it. Not allowed. Business connection of the firm, competing with the firm, or by using the partnership firm name. There is a CMA firm. Morning you work in the firm, evening what you do, you take the clients, personal clients, in the name of partnership firm, and you work for them and you make personal money out of it. Are these allowed? Section number 16 says, if you make personal profit out of these things, then you shall repay that amount to whom? Partnership firm, because it doesn't belongs to you. So section number 16 provides that if a partner derives any profit for himself out of partnership firm transactions, or by use of partnership property, or connection with the partnership firm or partnership firm name, he shall account for that profit. You should give an account of that profit, and you should pay it to whom? Partnership firm. Section number 16. Okay, next one. Section number 17, rights and duties of the partners after change in the partnership firm. Important hai. Now when changes happen, sir, changes happens in case of admission, in case of retirement, in case of death of a partner, or when you add some extra business to partnership firm, or you continue the partnership firm after particular period of time. See, I'll give an example for each scenarios. Tell me what will happen in these cases. Listen carefully. Okay, now for example, let's say, yeah, section number 17. So let's say there are three partners, A, B, C, sharing the profits in the ratio of 1:2:3. Mr. C is dead. C is dead means what? Now there are only how many partners? A and B are continuing the business. This is a one scenario. Second scenario, A, B, C formed a partnership firm. ABC firm for 3 years. Carry the business only for how many years? 3 years. But however, they continued the business. They continued even after what? 3 years. Then what are the consequences? The third scenario is A, B, C partnership firm. They are having some business. What is the business they have? They have a business of, let's say, manufacturing of cement. Plus they also had manufacturing of iron. Some business, extras business they add. They change it. They add manufacturing of what? Cement. So in all these cases, what is happening? Change is happening. What is happening? Change. Tell me in the first example, who are the partners? A, B, C are the partners, sharing profits in what ratio? Equal ratio. So not equal ratio, 1:2:3. Now C is dead, means change happened. Only A and B are the partners. Tell me what would be their profit sharing ratio? Or rights and duties? Will it remain the same or it will change? 1:2. It means what? It remains what? Same. The profit sharing ratio remains the same unless the parties agrees what? Otherwise. So unless they agrees to change, the rights and duties, the law provides the mutual rights and duties of the partners remains the same even after what? Change in the partnership firm, change in the constitution of the partnership firm. So here the change happened. 3 partners are there, 1 partner is dead, only 2 partners left. There is a change. So even though the change happened, reconstitution happened, the rights and duties remains the same unless parties agrees otherwise. Next one, there is a ABC partnership firm formed for how many years? 3 years. But now tell me, if you start a partnership firm with the intention to carry it only for 3 years, it is called as what partnership? Is it a partnership at will or particular partnership? If you start a partnership with the intent to carry the business only for 3 years, it is called as what type of partnership? Is it partnership at will or particular partnership? It is called as what? A particular partnership. What partnership firm? A particular partnership firm. Okay. If a partnership firm is formed for a particular purpose, it is called as what partnership? A particular partnership. Okay. So here it is formed for how many years? 3 years. Only for 3 years. Particular partnership. But it continues even after 3 years. Expiry has been done, continues. Now it becomes what? Partnership at will, because there is a time period. So now it was a particular partnership firm formed for 3 years, but it is continuing the business even after the lapse of 3 years. Now it becomes what? Partnership at will. Partnership at will. In this case also, the rights and duties remains what? Same. They remain same as they were when during the particular partnership, unless partners agrees otherwise. Third scenario where the changes happens. So there is a partnership firm carrying only one business. Now they're adding one more business, one more advantage, one more adventure, or one more business undertakings. In that scenario also, the law provides that the rights and duties remains the same unless the parties agrees otherwise. Section number क्या है? 17. Please read section number 17. Provides for the rights and duties of the partner subject to the contract between the partners where a change occurs in the constitution of the firm. The rights and duties of the partners in the firm remains the same as they were immediately before the change happened. Earlier, whatever the right were there, they remains the same unless partners agrees to change it by an agreement. In the same way, when a partnership firm is formed for a fixed period, but it continues the business even after the fixed period, it is also in that case also the rights and duties remains the same. Next one, where a partnership firm is formed to carry a particular business or adventure, but it carries the business with some more additional undertakings. In that case also the rights and duties remains the same. This is about section number 17. Okay, so we have discussed till section number 17. Section number क्या है? 17. Section number 17. One second. Now let us recall section numbers, the topics, so that you can remember the topics. Section number 1 provides what? Short title, extent, commencement. Section number 2 provides what? Definition. Section number 3, irrelevant. Section number 4, definition of what? Partnership. You can repeat with me, you guys can answer when I ask questions. Section number 5, creation of partnership, how it is created, by an agreement. Section number 6 is not there in your syllabus. Section number 6 provides determination of existence of partnership firm, means while deciding whether a group of persons are partners in a partnership firm or not, whether they will be called as firm or not, you shall have a regard to the relationship what they have, that is mutual agency relationship, not the sharing of profit. Section number 7 and 8, types of partnership. 7 provides partnership at will, 8 provides particular partnership. Section number 9 provides how many duties? 9 provides how many duties? There are 3 duties, right? Duties of the partners, 3 duties: common advantage, just and faithful, complete and true accounts. Very good. Section number 10 provides what? Duty of a partner to indemnify in case of fraud. Duty to indemnify. Indemnify whom? Indemnify the firm in case of his fraud. Section number 11 provides what? Determination of rights and duties. Determination of what? Rights and liabilities. How do you decide the rights and liabilities? By an agreement. Can that agreement be altered? Yes, it can be altered. How it can be altered? By notification, not by the consent of all the partners. Section number 12, conduct of business. How the business to be conducted, who can manage, how it is to be managed. Section number 13, the mutual rights and liabilities. What are the rights and liabilities of the partners when the agreement is silent? Section number 14 and 15, again it is not there. These are deals with a partnership property. What property? Partnership property. Partnership property. Section number 16, we just now discussed, personal profit earned by whom? Partners. Can a partner make personal profit out of partnership transaction? No. Partnership firm name? No. Partnership firm assets? No. Section number 17, the mutual rights and duties of the partners remains the same even after what? Change in the partnership firm. Okay. So these are the section numbers we have discussed. Next set of section numbers 18, 19, 20, 21 are important, most important section numbers based on which they can ask questions in the examinations, that we will discuss in the next class. Okay, thank you, see you guys in the next class.